This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So let's go through and have a look at a group statement of financial position that incorporates a bit of a step acquisition or a step disposal. So what have we got? Let's go through and have a look at the requirement, which is there at the bottom of the page. No surprise that it wants a position statement. It's the Riley group, so Riley must be the parent. And it's the 31st of December, is it 20x5? Okay. It's going to be important here that we understand the group structure. So what have we got? It says Riley acquired a 60% holding in the equity shares of Hume on the 1st of January X4 for a cash consideration of 75, the retained earnings of 25, and it tells us the fair value of the non-controlling interest. So it tells us everything to do with the original acquisition date. Is that the 2 years ago? It then goes on to bring in 31st of December X5, so this year. So we acquired a further 10%. So we've gone from 60 up to 70. So there is a change in ownership, isn't there? Okay. The non-controlling interest was 40, and it is now there. Is it at 30? Okay. And it tells us there was a consideration there of 15 million. So we can draw a line under that because those two bits are separate to the next two bits, whereby it tells us that Riley acquired a 90% of the equity shareholding of Jones. So Jones is a subsidiary. That was at the start of the year. Again, it gives us information about the cash consideration, the retained earnings, and the fair value of the NCI. But then what it says is we disposed of 20% of the shares in Jones for a cash consideration of 35 million. So there is a disposal. We had 90, we've lost 20, so we now have, is it 70? So again, there's just a change in ownership, so a transfer of reserves between the parent and the non-controlling interest. Key bit under both is that you have control at the end of the year, don't we? So we have two subsidiaries within the question. So based upon that, what we'll do is we will do two net assets working. So we'll do the net assets working first of all for Hume. Okay, so we're going to go through that and look at year end, look at their acquisition and post acquisition, and we're going to take share capital and the reserves. Year end, to get the figures for the equity and the net assets, we use the SFP, don't we? So what we've got there, is it for Hume? We have, is it 80 and is it 65? So I can take my 80, I can take my 65, I copy across the 80, and I need to find out the retained earnings at the date of acquisition. The date of acquisition was when we got that 60%, and we're told that the retained earnings at that date were 25 million. Again, no nonsense within the question, no pub adjustments or fair value adjustments. So I have, is it 105? Is it 145? And is it post acquisition? Is it there as 40? Okay. Everyone happy with that? Excellent. If we then go through and look at Jones, we look at the year end, we look at acquisition and post acquisition. Again, share capital, reserves, and the figure comes from the SFP, doesn't it? So within that SFP of Jones, it's 75 and 45. So we can copy those across, can't we? Share capital 75 at year end will be 75 at acquisition, won't it? What were the retained earnings? The retained earnings of Jones at acquisition were there as 35 million. Looks about right, doesn't it? Acquisition 110, year end 120, post acquisition movement is that there of 10. Okay, seems fair enough, doesn't it? What we've then got, we're not worried anything at the moment about this whole situation with the changes in ownership. We've just got 2 subsidiaries. We need to work out the goodwill in each of them. So we've got it's Hume, 1 subsidiary. We have Jones as the other subsidiary. So we look at the cost. We add on the non-controlling interest and deduct the net assets, don't we? Okay. All looks a bit too simple, doesn't it? So if we look at Hume, the first subsidiary, the cash consideration was 75 million. The fair value of the non-controlling interest was 40, wasn't it? So I can put in the cost of 75, the NCI of 40, and if you go back and check, I think the net assets at acquisition, were they there at 105? Hume, net assets, acquisition, boom, 105, there we go. If I total that up, you may have done so already. What have you got? I can hear you shouting. Yep, 10. Well done. And then is it there for Jones? Cash consideration, 120 million. Non-controlling interest, 13 million. So cost 120, NCI 13. Yeah, I can hear you scurrying back in your pages to look at the net assets, which are there. Is it as 10? Sorry, 110, isn't it? 110. Totaling that up, does that give you goodwill? Is it of 23? And when you total the 2 up, that gives you 33, which will appear on your consolidated statement of financial position, won't it? Okay. Excellent. There we go. Everybody happy with where we are so far? Yes. Brilliant. Because now we're just going to start to crank things up ever so slightly. Let's look at the non-controlling interest. The non-controlling interest of Hume. The non-controlling interest of Jones. When we look at these, originally the non-controlling interest in Hume was 40%, wasn't it? Because if we own 60, it's a 40% NCI. And on Jones, if we own 90, it would originally have been 10%. So 40% and 10%. Because we're going to start off with those, work out what the non-controlling interest is before there is then any change to it. So we take the non-controlling interest at the date of acquisition. So I think that was 40 for Hume, and was it 13 for Jones? And you can back that up with, yep, there we have it, the 40 for Hume, 13 for Jones, from our third working on goodwill. You then add on the non-controlling interest share of the post acquisition. So for Hume, that's 40% of the post acquisition profit of Hume, which are 40. Okay. The reason why we're looking at the full post acquisition profits is because the change in ownership under both situations arose right on the very last day of the year. So we want to work out what the non-controlling interest is just prior to that year-end date, so the millisecond before the changes in ownership actually occurred. So 40% of 40 is that there as 16. So the non-controlling interest would have been 56. And then on Jones, I think that's 10% of Jones's post-acquisition, which is 10. Okay, so 10% of 10 gives me 1. And that's there as 14. Okay. Now the challenge, ladies and gentlemen. This is where it gets particularly tricky. Let's deal with each one in isolation, isn't it? So if we go through there and think about Hume, then what happened is on Hume, we had 60%, didn't we? And we went through with Hume and we acquired a further 10%, didn't we? So we now own 70. So the NCI was equal to 40. The non-controlling interest is now equal to 30%, isn't it? Okay. So there is a reduction in the non-controlling interest. To work out that reduction in non-controlling interest, you're going to have to take, is it 10/40th, isn't it? Because we are reducing the NCI. If we know what 40% of NCI is worth, we can work out what each percentage is. So divide it by 40 and then multiply it by 10 to get us to that 30. So if you take 10/40ths of the NCI at the date of the change in ownership, that's 56, isn't it? Okay. So 10/40ths of 56, that's a quarter. So I think that works out is that as 14. Okay. If you want to go through there and play around with the journal entries, you don't have to, but we've gone through and bought more shares. So we credit the bank. How much did we pay? It was for a cash consideration of 15 million. So credit the bank 15 million. Debit NCI, is it with 14 million? And then I debit my reserves. Is that there with 1 million? So I'm reducing the NCI and I am reducing the reserves. Okay. So for now, all I will do is I will just debit the non-controlling interest. So I debit the non-controlling interest. Is that there with 14? Which goes through there and gives me, is it 42? Okay. Excellent. If we go through and then think about Jones. Jones, we originally had, was it a 90% holding? Okay. If we look at that 90% holding, what then happened? We disposed of 20% for 35 million. So we disposed of 20%, which takes us down to, is it 70%? So what we need to go through and do is we've made a disposal. So we're going to debit the bank because we have received 35 million. There's been an increase in the NCI. The reason why the non-controlling interest has increased is because we have given the NCI more of the net assets, and those net assets at the reporting date. So 20% of 120, that comes from here. They're your net assets at the year end, so just as we made that change in ownership. And the goodwill is also there, is that at 23. So if you tap that into your calculator, 120 plus 23 is 143. 28 or 20% of that gives me 28.6 million. Okay. So you need to take 20% of the value of the subsidiary, which is the net assets plus the goodwill. I then throw in my credit to reserves as the balancing figure. Is that there as 6.4 million. The bit that I'm going to deal with, as I've ticked, is that credit to the NCI, which is 28.6. So within my NCI calculation, for Jones, you have, is it 42.6? Okay. If you do 42 plus 42.6, does that give you, I think, is it 84.6? So if you total, careful, total the two together, that gives me 84.6 as my NCI. Whoa, that was tough, wasn't it? Okay. Work that through again in your own time if you're struggling with it. Aren't you glad that you don't have to do big, long exam questions? We've then got working number 5, which is our group retained earnings. So here it's 100% of the parent. 100% of the parent's retained earnings is 110. I then add on, was it Hume? We had, was it 60%? Yes, there's been a change in ownership, but it's like fractional. It's milliseconds, isn't it, at the end of the year? And the post-acquisition profit of Hume, I think, yep, there they are 40, aren't they? So go back to your net assets working to find that. 60% of 40 is that there as 24. And then 90% of Jones's, I think, was 10. Total that up gives you 143. And then what you also have as well is an additional working to deal with this group other components of equity. So you've got that other component of equity figure. Don't see it very often, but we do here because of the change in ownership. That's essentially anything that's happened within the year that is not profit related. Okay. So things such as gains on revaluation, your revaluation reserve is an other component of equity. Here it takes the, if you like, the debit or credit entry to your reserves from a step acquisition or a step disposal. So what we've got there, your group other components of equity, is that we take 100% of the parent, which is 10. And then we need to look at the change in ownership for Hume. Okay, so there is a debit to the reserves of 1. So that's your change in ownership of Hume. And there is also, I think, a change in ownership of Jones. If we go through there and look at Jones, you have a credit to the reserves, so an increase of 6.4 million. If you total that up, does that give you, I think, 15.4 million? Excellent. Wow. Imagine trying to do that within a real exam. You're just going to be tested on aspects of it, aren't you? Okay. If we then pull it all together, what have we got? So we're looking there, isn't it, at the group statement of financial position. We go through that and begin to consolidate. So we've got the non-current assets that we can add across and the current assets. We can Ignore those investments in Hume and Jones. So we've got there, is it my non-current assets where they're at 180, 115, and was it 100, which gives me, I think, is it 395 million. The Goodwill, which is working 3, was that there as 33, so we can add 33 in there. The current assets that we have, 80, 90, and 60. Uh, 80 and 90 is 170 plus 60 is 230. And if I do 395 plus 33 plus 230 gives me 658 on my calculator. I can go through then and look at the equity and liabilities. So you have the share capital. Remember, that's 100% of the parent only. So is that 250? I have my group retained earnings. So is that there at 143? I have my group other components of equity, which was 15.4. And don't forget your non-controlling interest. Your non-controlling interest after all of your adjustments was that 84.6, wasn't it? The other bits that you've got, I think, are for your non-current liabilities and current liabilities. So non-current 15, 14, 10. Remember that. 15 plus 14 plus 10 is 39. Current liabilities 50, 46, and 30. So 50 plus 46 plus 30 gives me 126. When you total it up, you end up, don't you, with 658, which you'll be glad to see is the same as our assets figure at the top. So a lot was going on within that question. The bits I want you to focus on is don't worry about the goodwill, don't worry so much about the net assets. I want you to focus on the NCI calculations, because when you go through there and look at the NCI calculations, remember what you had within Hume was a step acquisition with a change in ownership, and then was it with Jones, you have there, is it a step disposal with a change in ownership. So there was movements in terms of the ownership percentage, but it did not change the fact that we still had control, did it? Okay, work those through, make sure you're happy. If you do have any questions, get yourself on the forum. Other than that, see you later.